Hey, this is Jeff Kohler, the Option Addict, from www.optionaddict.net. I'm here to kick a little knowledge with you today, and that is on the topic of creating a day trading system. Now, if you're thinking that you're coming here to have me provide you a day trading system, hell no. No, that's not what I'm trying to do. I'll give you my mailing address and you can mail me a check first and I can build you profitable systems all day long, but I'm giving you the ideas here so you can build one and put one together yourself. A couple things I'm going to bring up before I get started in this process is, number one, are you ready to day trade? Are you fit for day trading? What makes you think you can be a day trader? For myself, I moved into day trading when I felt I mastered swing trading. Every time I've gone through and I've found a style that I liked and I've become good at it and I feel I've got it nailed down, that's when I start moving towards the next challenge. If you're looking at day trading as well, I haven't made this work, so I got to try day trading because maybe I'm just not a good trader at this. I mean, don't go through system upon system trying to find what works for you and all the while not making anything work in the meantime. You should move on to day trading when you've mastered your current style of trading, not failed at it. So for those of you that feel like you've got your current system nailed down, well then day trading naturally should be the next challenge. Couple other things. Number one, are you sufficiently capitalized to do this? You can't go in and start day trading E-mini futures and day trading index options if you don't have enough capital to back you. But most importantly, are you mentally ready? Are you psychologically in tune to be able to make this happen? And that's where I'd say most people, no, you're not. But the whole reason I'm doing this video here is so that you can have some tools that will help you create a system. We all know that if you have a system there to back you, it takes away the need for you to make emotional decisions at emotional times. So if you're going to day trade, you can't just get out there and start acting as a discretionary trader because, in my honest opinion, that's not going to work. The market normally works against that type of mentality. Anyway, so let's go over and let's talk about creating a system. The first thing you need to focus on is time frame. And to be quite honest, I don't really care what time frame you use. I think you ought to have a time frame that doesn't incorporate too much, but that doesn't incorporate too little, if that makes any sense. So if I'm a day trader, I'm not going to focus on just a one-day chart. I might want to look at maybe a one-week chart to see where potential support and resistance areas might be. You know, for example, right here I'm on a 5-day chart. Now, if I were only looking at a 1 or 2-day chart, I might see the downward trend, but I'm not going to see the highs and lows from which we came and know where the market might potentially rest. But what's most important is that you stay consistent. If you plan on using a 5-day chart, well then don't switch to a 10, don't switch to a 60, don't zoom into a 2-day. That to me is one of the most disruptive things you can do in day trading is start changing your time frames, because you'll notice as you start, and I encourage you to paper trade a little bit before you really put any real capital into the market, but you'll notice that every time frame chart is going to discount the other. You're always going to find discrepancies. So if you search long enough, you're going to find that. And once you start finding discrepancies, that makes you start second-guessing your system, you start making mistakes, and in the long run you start losing money, which is what you don't want to do. Now, when looking at the short-term charts, I mean, you still want to use support and resistance. You don't want to get too far away from the trading systems that you currently use, and you can see that support and resistance levels still apply even on short-term charts. They can help you plan around entry and exit points. They can also give you an idea when intraday trends are changing, etc. So I still like the idea here of using trend lines. But other useful forms of support and resistance aren't necessarily trend lines. I mean, you can use Fibonacci retracements, which are a popular day trading tool, and also pivot points, which I haven't spent a whole lot of time talking about pivot points. But if you go into the Studies tab here on Profit Charts, you scroll down, you'll find pivot points right there. Before you start bombarding me with questions about these, do a little bit of research first. Look it up. There's plenty of resources out there. Try google.com/pivot points. There's a lot of good stuff out there you can learn. Now, aside from support and resistance and trend, I mean, these things are obviously major players when you're day trading. What I try to do anytime that I day trade is I wait for about maybe a half hour to an hour at the max. And once I see the market's made a direction, I hop on. And as that direction continues to move, I stay with my position. I don't usually add or subtract a whole lot. But when I see trends changing via weakness in oscillators or support and resistance levels, then that's when I start stopping and reversing and things of that nature. Now, I mentioned oscillating indicators because it's important, in my opinion, that you have them. As far as creating a system, something that tells you whether to buy or sell as opposed to you making that decision is going to be a huge benefit to you in regards to making emotional decisions. So some oscillators I would recommend that you take a look at are, number one, a price oscillator. And that could be your MACD, your stochastic, your RSI, your CCI. My favorite has always been the stochastic when I'm looking at shorter term movements. If I'm looking at longer term movements, I'm looking at divergences and things like that, you'll notice occasionally I use the RSI. Those are the two oscillators I usually ever pay any attention to. Right now I'll just throw the RSI on there. And naturally what RSIs are going to be good for is when they reach overbought or oversold levels. And you notice here on the RSI it does this only a couple of times where it dips below oversold levels here, here, and here respectively. And is overbought once at this point, well ahead of a big drop in the S&P E-mini. So you can use these as they start to make turns. You can try to play directional changes. However, the RSI I don't like. Like I said, for intraday trading, I don't like it for directional changes because you'll notice that it stays within these channel lines quite a bit, and it's pretty choppy. So maybe consider a stochastic, maybe consider a MACD, but get some kind of an oscillator there that's going to help you interpret price action. Now, the next important oscillator that I think you need to have is some way of interpreting volume. And now this can be achieved with using, let's say, the on-balance volume indicator. You can use an accumulation distribution indicator. You can use any of these, but to me, what's really important is that you use just some way of interpreting volume so that you know whether it's basically positive or negative, or whether it's shares or future contracts being accumulated, or whether they're being distributed. It's not necessarily to analyze the volume, but it's really more of the sentiment behind it. So looking at the on-balance volume indicator right here, you can see that anytime it dips below the zero line, then this is obviously distribution. Anytime it dips above the zero line, this is obviously accumulation. So this can help you interpret whether volume surges are positive or negative. Now, I know most of the time you can look at price and determine that, but hey, not everybody can do that. So it's good to have some kind of a volume indicator there to help you out. I'm going to close this out, and the next indicator I think you ought to take a look at is a market breadth indicator. And you may even want to use more than one. There's several here that you can choose from. This can be something as simple as DMI, using AD line, getting advanced decline information, the tricks, the trend, or McClellan oscillator, which is an oscillator I've used quite a bit in my own day trading. But as I add this to the chart, you can see this acts as similar to a MACD stochastic or an RSI. But what's important is that it helps you understand the breadth behind a price move. So if you're seeing that prices are rising and you've got the majority of players behind that move, well, then it's going to be a much healthier move. It's going to be a trend that probably lasts a little bit longer. If you're seeing moves that take place on, let's say, negative breadth, like if you look through this move here, let me highlight this. You can see this rally that takes place, and looking at your McClellan oscillator, this is when it was kind of mediocre to negative. You can see this rally doesn't last very long before prices start to pull back pretty significantly. However, a move prior to, you can see that this price action happening on a rising McClellan, you can see this trend lasts for a couple of days and ultimately is one of the bigger moves that we saw in the S&P during this time frame. Market breadth is one of the most important indicators I think you're going to need if you're day trading, especially if you're day trading E-minis or index options or anything relating to market indices. So there's a couple ideas you need to do. Now, as far as putting them into motion and determining when you buy, when you sell, like I said, I'm not going to be here to build that system for you. You can play the turn on an oscillator, let's say if that's confirmed by a rising sentiment line, and also you're seeing prices start to break out of a nice support or resistance level, let's say right through here. Maybe that triggers a buy signal. Like I said, for me, what I do normally most when I wake up in the morning is I see which direction the market wants to go. I hop on board and try to play that trend until it changes. Now, you can also apply the same rules for stocks if you want to go out there and find the top 10 gainers and losers when the market opens. That's normally one of the best shopping lists to go for day trading stocks. But what's most important here is that you backtest and you paper trade. So when you're trying to determine and build your system, I've given you some ideas on indicators that you might want to use, but putting the pieces together as far as when to buy and sell, that's going to require some backtesting. So as you're going through the process, feel free to use the forums. There's going to be plenty of people out there in your shoes, and personally I find it better to go through and build rules and systems like this when I know other people are out there doing the same thing. There's some pretty credible sources out there. So that'll do it for me, folks. Hopefully this information was useful. This is the Option Addict saying so long and happy trading.